Hey everyone, and welcome back to the NOSR Webs podcast. Today we're diving headfirst into the wild world of crypto trading psychology. So buckle up.
Yeah, knowing your moving averages and your max D is only half the battle. The real opponent is often the one staring back at us in the mirror.
Ooh. I like that, getting a little philosophical. And that's exactly what we're going to do today. We've got a ton of fascinating research lined up, all about how to avoid self-sabotage in this market.
Yeah, because let's face it, sometimes this market feels less like investing and more like, well, a psychological horror film.
You're not wrong.
You know that statistic that 95% of traders fail due to emotional mismanagement?
95%. Okay, yeah, that's officially terrifying. But seriously, what's the deal here?
Well, emotions are totally natural, especially when you're dealing with the volatility of the crypto market. The problem is, fear and greed, they can turn us into impulsive gamblers instead of, savvy investors.
So it's like our brains are wired for instant gratification.
Yeah.
But the crypto market is like, hold my beer, watch this 30% daily swing.
Exactly. And that's where things get messy. Imagine you're on this crypto roller coaster, right? Stomach churning, palms sweating. If you hit the sell button every time you feel a dip, you're going to miss out on the long climb.
Oh, I felt that. I think we've all been there, panic selling in the depths of despair. So how do we cultivate that Zen-like calm amidst the chaos?
Well, this is where mindfulness comes in. And no, it's not just some woo-woo meditation thing. It's about recognizing your emotions as they pop up. Like fear when the market dips, or FOMO when a coin moons.
I've actually started using breathing exercises during those nail-biting moments. And honestly, it's surprisingly helpful.
There's a reason for that. Studies show that mindfulness can actually sharpen your decision-making, especially when you're under pressure. It's like training your brain to stay cool when the market is, throwing a tantrum.
So we're not just managing our portfolios, we're managing our minds. But hold on, isn't there another layer of trickery going on here? What about those cognitive biases you mentioned?
Yes. The brain's sneaky little shortcuts. They're meant to simplify things, but in trading, they can lead us down some very, very expensive rabbit holes.
So you mean maybe I'm not the next Warren Buffett? I just fell for confirmation bias by reading too many to-the-moon tweets.
Bingo. Confirmation bias makes us crave information that validates our beliefs, even if those beliefs are total hopium. It's like wearing rose-colored laser eyes, blinding us to the potential risks.
Okay, so we've got these wild emotions running amok. And our brains are playing tricks on us. This is starting to feel less like investing and more like a psychological obstacle course.
Don't worry, there's a way to navigate this mental maze. It all starts with discipline and planning. Think of it like creating your own personal trading rule book.
A trading plan?
Yeah.
You're not suggesting we ditch the thrill of the gamble and become all boring, are you?
Boring is profitable, my friend. A good trading plan lays out your entry and exit points, your risk management, your profit targets. It's like having a map in the crypto wilderness.
So it's like saying, okay, emotions you can stay, but you're sitting in the backseat. I'm driving this portfolio.
Exactly. And get this, traders with a structured approach are 60% more likely to consistently rake in those sweet, sweet profits.
60%. Now, those are some numbers that can soothe even my most anxious FOMO pangs. Okay, so mindfulness for emotional control, a trading plan for disciplined decision-making. What else can we add to our crypto survival kit?
Well, let's talk about risk management. It's not just about avoiding losses. It's about protecting your hard-earned capital and playing the long game.
Okay, risk management. Sounds a bit intimidating, like something only serious Wall Street types worry about.
Don't overthink it. Risk management is simply about not betting your rent money on a meme coin your friend raved about.
Touché. So we're talking about not going all in on every hot tip that pops up on crypto Twitter.
Precisely. In a world where daily swings can hit 30%, you've got to be strategic. Stop-loss orders are your best friend. They automatically sell if a position tanks, preventing catastrophic losses.
Oh, so it's like setting up a safety net in case things go south. Makes sense, especially when you're dealing with a market that can be as unpredictable as a cat on a sugar rush.
Exactly. Think of stop-loss orders as your automated bodyguard, protecting your portfolio from those nasty surprises. And speaking of protecting your capital, let's not forget about position sizing.
Okay, position sizing. What exactly does that mean? Is it like finding the perfect yoga pose to manifest crypto profits?
Not quite. It's about determining how much of your portfolio you're willing to risk on a single trade. The golden rule is never risk more than 1–2% on any one play.
1–2%? That seems super cautious. Where's the fun in that?
Remember, the goal is not to win every trade, but to stay in the game. It's about building wealth slowly and steadily, not chasing quick wins that could wipe you out.
All right, I'm starting to see the wisdom in that. Slow and steady wins the crypto race, right?
Exactly. Risk management is all about playing the long game, and that requires patience and discipline.
Well, we've covered a lot of ground here in part 1. Mindfulness trading plans, risk management. It's like we're building an emotional fortress to protect ourselves in this crazy market.
And trust me, that fortress will come in handy when we tackle the next layer of the psychological game, cognitive biases. But we'll save that adventure for part 2.
Ooh, a cliffhanger. All right, everyone, that's it for part 1 of our deep dive into crypto trading psychology. Make sure to hit that subscribe button so you don't miss the next episode. And don't forget to check out the amazing offers in the description below.
Until next time, stay informed, stay disciplined, and as always, happy trading. Welcome back to the NOSR Webs podcast. We're picking up right where we left off, deep in the trenches of crypto trading psychology.
You know, it's amazing how much psychology actually plays into trading. I feel like I'm getting a crash course in behavioral economics along with my crypto education.
It's all connected. Understanding your own mind is just as important as understanding the markets. Last time we built our emotional fortress with risk management. Now it's time to sharpen our mental swords and tackle those pesky cognitive biases.
Okay, I'm ready to slay some cognitive bias dragons.
Yeah.
But first, remind me, what exactly are we talking about here?
Cognitive biases are like those annoying autocorrect errors, but for your brain. They're mental shortcuts that simplify information. But in trading, they often lead to, well, bad decisions.
So like instead of spelling Bitcoin, our brains accidentally type buy Bitcoin buy now.
That's not far off. Remember confirmation bias. It makes us seek out information that confirms our pre-existing beliefs, even if those beliefs are shaky at best.
Oh yeah, confirmation bias. My old nemesis. I once convinced myself a certain meme coin was going to the moon because I found 3 Reddit threads and a YouTube video that agreed with me.
Classic confirmation bias. We ignore the warning signs and we focus only on the to the moon hype. And speaking of hype, let's talk about FOMO, the fear of missing out.
FOMO, the silent killer of crypto portfolios. I swear it's like there's this part of my brain that screams buy, buy, buy every time I see a green candle.
And the worst part is FOMO-driven trades are 2.3 times more likely to end in tears. It's like throwing your money into a bonfire of greed and regret.
Ouch. So basically chasing the hype is a one-way ticket to financial heartbreak.
Pretty much. And studies show that FOMO doesn't just make us trade impulsively, it actually makes us bet bigger. We're talking 45% larger positions than we had planned.
So not only are we more likely to lose, we're also more likely to lose big. That's a double dose of pain.
It's a cruel trick our brains play on us. We see others making money and our reward systems go haywire. Logic goes out the window and we become slaves to FOMO.
Okay, so how do we resist the siren song of FOMO? Do we need to disconnect from the internet and live in a crypto-free cabin in the woods?
A digital detox might not be a bad idea sometimes, but there are more practical strategies. One is to focus on your own trading plan. Remember those goals we defined. Stick to them, even when the market is going crazy.
So it's about having a clear vision and not getting swayed by the hype storms around us.
Exactly. You can also try reframing your thinking. Instead of obsessing over what you might miss out on, focus on the risks of chasing a hot trade.
Ooh, I like that. Turning FOMO into a healthy dose of fear of losing my hard-earned crypto.
Exactly. Remember, there will always be another opportunity in the crypto market. No need to jump on every rocket ship that blasts off.
Okay, so we've covered FOMO. But what about the other side of the emotional coin? Loss aversion. Why do we cling to losing trades like a drowning sailor to a life raft?
Loss aversion is a powerful beast, my friend. Studies have shown that the pain of a loss is twice as strong as the pleasure of an equivalent game. No wonder it feels so bad to see red in your portfolio.
Twice as strong. That explains why I feel physically ill when I see a trade going south.
It's ingrained in our wiring. We're wired to avoid pain, and financial losses trigger that pain response big time. But here's the kicker. 65% of traders hold on to losing positions for too long, hoping they'll magically turn around.
Oh, I'm totally guilty of that. It's like I convince myself that if I just hold on long enough, the market will reward my stubbornness.
Unfortunately, the market doesn't care about our emotional attachments. And that stubbornness often ends up costing us dearly. Remember that 30% daily swing we talked about? Those can turn a small loss into a massive crater in your portfolio if you're not careful.
So how do we escape the clutches of loss aversion? Do we need to meditate on the impermanence of all things, including crypto gains and losses?
A little mindfulness never hurts. But there are more concrete strategies. First, remember those stop-loss orders. They're not just for preventing catastrophic losses. They're also for cutting your losses before they become emotionally crippling.
So it's like setting a boundary and saying, okay, loss, I see you, I acknowledge you, but you're not going to take over my portfolio.
Exactly. Another helpful strategy is to reframe your thinking about losses. Instead of seeing them as personal failures, try to view them as valuable learning experiences.
Okay, that's a tough one. It's hard not to feel like a total idiot when a trade goes bad.
But even the most successful traders experience losses. It's part of the game. The key is to extract valuable lessons from those losses and use them to improve your strategy.
So it's all about having a growth mindset, even when our portfolios are feeling a little bruised.
Exactly. Remember, trading is a marathon, not a sprint. There will be ups and downs, wins and losses. If you can maintain a positive attitude and focus on continuous improvement, you'll be well on your way to achieving your trading goals.
You know, this whole conversation has been incredibly insightful. I feel like I'm finally starting to understand the psychology behind successful trading.
I'm glad to hear that. Mastering your mind is just as important as mastering the technical aspects of trading.
Absolutely. All right, folks, that's it for part 2 of our deep dive into crypto trading psychology. We've explored the treacherous terrain of cognitive biases, from confirmation bias and FOMO to the formidable force of loss aversion.
We've also equipped you with some powerful strategies for navigating these mental pitfalls and emerging victorious.
Exactly. But the journey's not over yet. Join us for part 3, where we'll explore how strategic planning and a growth mindset can take your trading to the next level.
And in the meantime, don't forget to check out the amazing offers in the description below.
Until next time, stay sharp, stay disciplined. And as always, happy trading. All right, everyone, welcome back to the NOSR Webs podcast. We're in the final stretch of our deep dive into crypto trading psychology.
We've battled emotions, we've conquered those pesky biases. Now it's time for the final boss level, strategic planning.
Strategic planning. It sounds a little too corporate for the, freewheeling world of crypto, doesn't it?
Don't be fooled. You wouldn't climb Mount Everest without a plan, would you? The crypto market is just as treacherous, maybe with fewer Yetis.
Okay, point taken. But seriously, why is strategic planning so crucial in a market that moves faster than a cheetah on a caffeine rush?
Because without a plan, you're just reacting to the chaos. Successful traders, on the other hand, they're in control. They spend a whopping 60% of their time planning their trades.
60%. Wow, that's a lot more planning than I ever imagined.
Yeah.
I guess it's not just about chasing green candles, huh?
Exactly. A solid trading plan is your roadmap to success. It helps you define your goals, manage your risk, and stay focused when the market is screaming buy or sell.
So it's like having a personal trading constitution. Guiding principles that keep me from making impulsive decisions.
Precisely. And the best part is a good trading plan can actually reduce your stress levels because you're not constantly second-guessing yourself.
Okay, I'm sold. But what exactly goes into this, magical trading plan?
First things first, define your goals. Are you in it for the long haul, or are you looking for quick gains? Once you know your why, you can tailor your strategy accordingly.
Makes sense. It's like choosing between a leisurely hike and an adrenaline-pumping bungee jump. Totally different approaches.
Then you need to nail down your risk management strategy. Stop-loss orders, position sizing, the whole 9 yards. It's like building a safety net for your portfolio.
Right, because even the best-laid plans can go awry, especially in the unpredictable world of crypto.
Next up, define your entry and exit criteria. What signals will trigger a buy or sell order? Having clear rules prevents emotional decisions from hijacking your portfolio.
So it's like saying to my emotions, hey, I appreciate your input, but the rule book is in charge here.
Exactly. And here's a pro tip. Successful traders also incorporate regular performance reviews into their plans. It's like checking in with your portfolio and asking, how are we doing, team?
Performance reviews for my trades. Interesting. I guess even in the world of crypto, feedback is essential for growth.
Absolutely. Regularly reviewing your performance helps you identify patterns, both good and bad. It's like studying game film to improve your skills.
So it's not just about setting a plan and forgetting about it. It's about constantly analyzing and adapting.
Precisely. And that brings us to the final piece of the puzzle, cultivating a growth mindset.
A growth mindset. Sounds a bit like something you'd hear in a, self-help seminar.
But it's crucial for traders. A growth mindset means embracing challenges and setbacks as opportunities to learn and grow.
So instead of beating myself up over a bad trade, I should see it as a valuable lesson.
Exactly. Trading is a journey, not a destination. There will be bumps along the way. A growth mindset helps you stay resilient and motivated.
Wow. This has been an incredible deep dive. From emotional awareness to cognitive biases. risk management to strategic planning, and finally, the power of a growth mindset. I feel like I've leveled up my trading psychology game significantly.
And remember, the best investment you can make is in yourself. Keep learning, keep growing, and keep exploring the fascinating world of crypto trading.
Absolutely. Well, folks, that concludes our epic journey into the world of crypto trading psychology. We've covered a ton of ground, but remember, this is just the beginning.
Don't forget to check out the amazing offers in the description below for some valuable resources to help you on your trading journey.
And until next time, stay curious, stay disciplined, and as always, happy trading.